Welcome back to Agency Acquisitions and Exits. I'm your host, Peter Lang. And in today's episode, we are joined by my good friend, Mark Homer. Mark built his agency GNGF from scratch in 2011, focusing on legal marketing niche. His journey includes buying out partners, doubling down on a specific niche like legal digital marketing, and navigating explosive growth during COVID, and ultimately selling his agency to a PE-backed strategic competitor. Pleasure of working with Mark as his board advisor and seeing him excel at M&A. And today he shares key lessons from his M&A journey, partnership transitions, and leveraging mentors and more. His exit is atypical, and it is very important that you stay through the whole episode. So let's dive in. Mark, good to see you. Thank you for joining me.
Always a pleasure. It was a pleasure, Peter.
We got some stories to tell. Before we get into the meat and potatoes, can you start us off with this backstory and share your journey from this corporate world you came from to running an agency?
Yeah, I'm definitely the accidental agency owner, if there ever is one, I would say. I meet a lot of agency owners who came out of creative world and agency world and started their, hung their own shingle. That was not me. Funny enough, I do have my actual formal degree is marketing and technology. I had a double major. So I'm one of the people who actually is using my major. So I think that's actually interesting. So yeah, I had a double major in programming and marketing. So
you're actually in the career, or were when we get there, that you subscribe to from an education. Yeah, that's not that normal.
No, it's not normal. I've come to find. But out of college, I went over to Ernst & Young and started in management consulting, which I've now come to realize that consulting is the most entrepreneurial you can be while still getting a W-2 paycheck, right? So I think that was a hint to what was to come. So I was at Ernst & Young and being dropped into companies, having to go learn a company really fast, and then go at 23 years old, tell the team how they needed to change a bunch of stuff and then leave and go on to another project, right? Very interesting world at 22, 23 years old, when everybody's like 20 years older than you and you're supposed to be the expert. I jumped over to IBM from Ernst & Young right when this little thing called the World Wide Web went from like universities and scientists to commercial applications, right? Just right place, right time. I got to build some of the websites for large Fortune 500 companies, even build applications that connect websites to their backend systems. And this is, Peter, we're talking like 1997. It's before Google was even a company, right? So like, again, right place, right time, early on this brand new wave of the way to access media. Jumped over to San Francisco because that's where all the cool kids were in that space. So did the venture capital VC-backed startup thing during the first big dot-com bubble. And then, I would say dot-com bubble to bust. I was, one of the ones that we stuck around a little longer, but yeah, we did not make it through. So if you want to know how to raise a lot of venture capital money and have nothing to show for it, I do have that experience. I also helped scale an event marketing technology and service company that actually a friend of mine had started. And so I had helped him along the way early on, but he brought me on as he had kind of crossed over $1 million or so and was trying to figure out like, what do I do with this? So we took that up to about $10 million in revenue. So that was my first foray kind of into true like marketing. This is experiential marketing, I guess is what it's called, but event marketing, large, Fortune 500 events, providing technology and services to them. And then I took a break from that. We moved. I was in Chicago at the time. We moved to Cincinnati. Kids were getting set up. And said, well, I'll do some consulting on the side. Whatever. And that's when I started, helping out some small businesses here and there. Met a couple other guys that were doing something similar at a conference. And that's when GNGF was founded. So Get Noticed, Get Found. We're talking 2011 at this point, which we'll get to later. GNGF was recently sold. So that's probably why we're here to talk. But I did start GNGF with two other partners. The Map Hack. I don't remember people remember this, but there was a time when you did a search engine result and it didn't have a map of a local business. So this had just started. And our idea was essentially, well, this could be a level the playing field for local businesses. So we thought, let's go in and help local businesses, leverage the map search engines and some of the newer ads that were available to them. And somehow, somewhere, we ended up with a law firm and did really well with somebody who actually had some level of respect by other law firm owners. And she referred us out to a ton of people. And next thing I know, majority of our revenue was coming from law firms. So the more we learned about that profession. The more we realized there was a ton of opportunity to help law firms through digital marketing, we were still convincing them why they should stop investing in the yellow pages in 2012, right? So there was a lot of opportunity.
Well, the good thing is you're used to showing up to a established company with some people who were ready for change, or maybe not ready for change, but needed change, and convincing them. This was 2011 when you started GNGF. And you were creating an agency when you created an agency?
We were creating a service. Like we were trying to actually build it in a more, like we had the thought that at some point it could be like a little bit more software oriented. But we were definitely outsourcing a lot of the doing. Like, we kind of had a little formula that was working. And when I say little formula, I mean, like we were speaking at search engine events like PubCon and some other search engine were like, we were speaking at these on how to leverage the maps, so like we kind of knew what we were doing. But no, it was basically not, the idea wasn't to go build a big agency. It was, how fast can we scale what we're doing? And then there were some really big players in the space. Maybe they would want to buy us. We figured, maybe within 5 years, we would scale fast enough that one of the really big players in the space, whether they were a technology software company or another services company, might want to pick us up. That was actually the original thought. I mean, it took me 13 years, Peter, instead of 5. We can come back to that. But and then we actually, once we figured out as law firms, we did a lot of things that now I think are just what people do. But at the time, we wrote a book specific to the legal industry. This is in late 2012. Now there's companies that, consult you on how to do that and publish and everything, but we figured it out ourselves. We were speaking at a lot of legal conferences and events. And so just from that work, the agency grew really fast. So and in fact, it grew almost too fast that it was probably like early mid 2013. One of the partners said, look, we have to start hiring people. We have to, full-time staff, get an office. This is going to become an actual real business, not just a bunch of outsourced resources. And he's like, I'm not ready to sign up for that. So we it was very mutual, but we bought the first partner out. And he was in San Diego and the office was created in Cincinnati, Ohio. So I don't blame him to leave paradise to come to Cincinnati and run a local marketing agency for law firms was not what he wanted to do.
Fair. Was this your first experience of a transaction?
Yeah. Oh, yeah, absolutely. This was, because essentially what it was, right? It was a purchase agreement that was built with essentially a heavy seller note because we were growing fast, but we weren't super profitable. So it wasn't like there was a pool of money and neither of us wanted to grab our own personal money and just say, here you go. Because we're figuring it out, right? It's only a couple of years in. But it was very amicable. He was happy with the number we came up with. It was a seller note. We paid it over time. We actually paid it off a little bit early just because we had a couple of good years after that. But yeah, that was the first time going through the process. A lot of lessons learned in terms of, things you should have in your operating agreement with partners.
Yeah.
So there's the nuance of buying and going through a purchase agreement from somebody who's not, part of your company, but it's another thing when it's somebody who's part of your operating agreement. There's things you can do that you probably should do that have in place that I would do now.
Did you feel, I was going to say informed, but did you feel like a beginner? So a business partner says, hey, Mark, I'm looking at not moving forward with the company, buy out my shares. Is that the position? Or was that what you were fronted with? And you're like, buy out your shares. What does that mean? Let me go buy a partner, working with lawyers. How did that go?
Yeah, we quickly, reached out to our network and just said, and we were in Cincinnati at the time, so we found a Cincinnati law firm to represent us, larger regional one here. But that was it. It was like, what is this? And you go back and you look and it's like, well, the share agreement was, we all put in $100 and then there's this many share, right? It's like the stuff that everybody does in the early days and nobody really put $100 in, but that's what it said on the paper, whatever, and that's the share. So we start from there and then it's, well, how do you value it? Because if you are the one selling, you of course think it's going to be worth so much more. And then if you're buying, you're like, well, but I'm doing all the work and it's not worth it yet. And so like those conversations are very interesting. There's ways to have, again, things in your operating agreement that solve that. Make it a lot better. But we didn't have any of that in place the first time. So
Boilerplate, LegalZoom or something easy template.
Yep.
And you got business partners, and now you got to, figure out what to do next and come to an agreement on a valuation, structure it. So that was amicable. You didn't earn out. So basically paid over time.
Yep.
And now there's 2 business partners and get notice, get found.
Yep.
But there wasn't 2 partners for that much longer, right? So how did the next few years look for your journey?
So I mean, it was some good growth. I mean, I'll be honest. I mean, we did a great job of kind of taking, once we kind of got the office going, hired a team, we're able to kind of take a few hats off, right? As the saying goes. My business partner and I were able to kind of really kind of get into like our lane. So like I focused on operations and some of the marketing. We both shared marketing, and he did a little bit more of the sales. And from that perspective, we had some good growth, but kind of hit a point where, you might, in hindsight, call it a little bit of an agency burnout. But he had some other things he wanted to go do, and one was there was a charitable foundation he wanted to start, and that was going to help at-risk youth and stuff, and it was very noble. And so we had some good conversations, and he's like, "Hey, I think I'm not going to be able to spend the time that you need in this business, and so what would you offer me?" And so we went through it again. It was a little bit easier because we did have some things in place, right? But while we added a lot of things in place, we still didn't come down to, and this is the number one thing I would change is if there's no agreement, how are we going to value the agreement, the company? And we didn't really have, like, I don't want to call it like a shootout clause. We weren't trying to go to that point, but what is the way you value at an exit? Are we going to go in saying we're going to focus on profit and only value based on profit? Is it going to be 3 different valuation methods and we're taking average, whatever, there's different ways to do it. We didn't have all that documented. So it did take a little longer. Like you asked me some questions when we were talking about doing this podcast. And I was thinking back and realized that it took me longer to buy out my second business partner from when he said go to when we actually got final agreement and purchase agreements and notes than it did to sell GNGF. So I think that's interesting. So I guess you do get better over time, as you learn these things.
Yeah, 100%. Especially since you have like 3 major opportunities to measure within the same company.
Yeah. And then things like, like the seller note was easy on them, but then figuring out, how to incorporate incentives into a purchase agreement. We had clawbacks. It was a small front, 24-month seller note. It wasn't anything crazy. The big thing was, we had things in there about, releasing liabilities, because early on in a company, there's a lot of personal signature on a lot of things, right? And so, we had some of that in there, and it was, again, all these things that were clauses and stuff that lawyers add that you get to read the detail of that just make you a little more knowledgeable about the nuances of business that you forget when you're just running the basics.
100%. Yeah. In hindsight, you talked about some of those lessons learned through the first buyout of a partner that then you implemented on the second buyout. Hindsight, going through 2 buyouts, what are some of the main things that you would have changed, improved to make it go along smoother?
Yeah, I think the biggest, I think there's a few. So I'll say, like, I'm not against partnerships, even though I bought 2 partners out. I was the only person who owned at the end. In fact, probably one of the bigger things I missed, the last, 4 or 5 years was having that kind of equal playing field person you can have some deep conversations with. There's something to be said of a equity partner versus a leadership team. There is a difference. I'll put that out there. Love my leadership team, but I think there's just a natural difference. Hopefully people understand that. I think what I would have done a little differently is one is the documented process for buyouts. I think that is in the operating agreement. If somebody wants to kind of like walk away for any kind of reason, I mean, and I've heard all kinds of reasons through talking with entrepreneurs over the years, like, a spouse coming down with, like, a really bad, cancer a diagnosis, or, parent needs to be taken, like a whole bunch of like legit valid reasons of, I can't put the time in. What does it look like to put me out? And, if you haven't really thought of what that looks like and know what your enterprise value is every year that you're valuing it and how you would buy each other out, you can put all that into your operating agreement. That's something that I would have, I will, if I partners again, that I will definitely be incorporating, is just, knowing how to do that. And then, maybe putting the money in there that, hey, we're maybe you do evaluation every year or every 18 months or something. So
Yeah, and it's a healthy exercise, especially when it's determined friendly than
yeah.
adversarial external.
Yeah, I mean, because we had all the things in there, like if somebody was to, like the whole joke about, so somebody gets hit by a bus, what happens? Like, okay, does the spouse get the shares, or is there a way to buy out? And so we had all these things about that. We just didn't have how we value the company to buy out each other, which seems like a silly oversight. And, I kind of look and go like, well, shouldn't the lawyers know to do that? But some of these things are like until you go through it, you don't realize that it's important. And I think sometimes lawyers don't realize it's important until they've gone through it with somebody.
Really easy in the day-to-day of running a business, being enthusiastic, solving problems, hiring people, to get caught up and not prioritize documenting worst case scenarios of outcomes of your partnership or even the business. And even if you're a solo owner, the value of your enterprise every year is a productive measure of creating value and the return on time. You went from startup 2011, buying out partners, learning from those. Now it's just you. Give us a sense of where the business was with just you, because, spoiler alert, buying out your partners was very favorable for you in the recent exit.
Yeah, I mean, at the time, it was a very painful amount of money that I was putting out every month. In hindsight, it was probably an incredible return on investment. And again, hopefully my partners were very happy at the time, like return on investment. But yeah, I mean, we're saying late 2017, so let's call it 2018. I still had in mind that, at some point I want to sell for significantly more than, I paid for his, shares, right? So I needed to focus on profit and repeatable systems. That was where my head was. It's like, how do I start building much more repeatable things that, because at the time it was still the two of us throwing a lot on our back up until and kind of the hustle, right? Like, the sales, the operations, there was, like, we were the glue that kept everything together. And the team did a lot of, we had a team and they were great, but it was still kind of like the two of us guiding,
driving the business forward. Yeah.
100%. So after that, I started implementing different business methodologies. I took stuff from my corporate background, some of the smaller business methodologies. So EOS, scaling up, great game of business. I mean, there's just a bunch of other, like that. I just kind of took the things that made sense for our agency from those. I mean, I would say we were mostly built around EOS from the cadences of meetings and the vernacular. But we incorporated other things that worked for us. So I got to the point where I'd say by the end of 2018, I was not responsible for any clients. That was a big step. That was my first big thing, was like, I wanted to get out of the operations first. So I had account managers and production operations team, reported to director of operations. And if I talked to a client, it was either really, really, really good, and they wanted to talk and just say thanks and congratulate, they do a case study or something, or it was really, really, really bad. And that was the only, and I was, fine with that. I mean, I still knew a bunch of our clients from the old days, but like they realized that they got much better access and communication when they worked directly with the team. So
Yeah.
that's good.
You also bought out your business partner who was responsible for sales.
Correct.
And this is another important thing that we'll highlight soon, that you had to bring in a salesperson.
Yep. Excuse me. Yeah. So the sales was interesting because I kind of just put sales on me when I bought them out. And again, we were the business owner salespeople, right? We got to make whatever call we wanted. The process got to be kind of what we wanted it to be. We sold was a little different every time because that's what the person could buy, because we weren't really following a process. We were just getting business. And so I actually reached out, and I've done this over the years, right? I like to leverage people who become experts in something or have been there, done that. Like I'm an entrepreneur organization because of just being leverage, like the shared experiences of a lot of other entrepreneurs. I've brought mentors and coaches on throughout the years, and it's all been great. Like I would say, every time I brought in a coach, there's been a measurable return on investment. So I brought in a sales coach who basically made me realize that I needed to build a sales process that I needed to follow before I could bring somebody in. So helped me build a sales process. So we documented, refined, improved all of that. And then he actually helped me with the hiring process to bring the right type of person to fit that process for our agency, not just any salesperson. And that was a night and day because, like I was able to kind of start handing that off. And I'd say, fortunately, that was all done right before COVID happened, right? Like, so we had, full-time salesperson being able to focus on things. So I was able to go out, be the face of GNGF. And then I had a salesperson and a delivery team that was executing everything. And because of that, I think we grew a bunch during COVID. And so that was great. In fact, I tell people like, yeah, we took PPP money like everybody else, but I actually took it because things were going well and hired people, not just, paid salaries and kept people around. So it was, I think, great use of the money.
So you're out of client interaction. You're out of sales. This is 2020. When did this M&A show up and you go, oh, okay, well, now I have some space and let's think about this.
Yeah. So remember, going way back here, selling GNGF was always in the back of my mind, right? Like that was a goal. It was like I wanted to get this to a certain point, and who was the next level of person who would take it from there. So thinking a little bit with the end in mind, I wish I would have done a little sooner. But like it was there, right? Like it was like this was the idea. It wasn't I was just going to go make this some massive agency and everybody's going to run it someday, and I'm always going to be around. That wasn't the goal. So M&A was there. In fact, like throughout the process, I was always keeping my ears open for something. Like we did it's very unusual, but 5 competing legal marketing agencies that I would consider ourselves boutiques, compared to the big players. But we got together and we did for multiple years our own legal marketing conference. So of course that led to some conversations about, should we have some consolidation? What could be the economies of scales? Would we get increased multiples? So, again, always thinking about this, always having some of these conversations. Nothing came of it. But in hindsight, probably should have. I mean, there were sort of some good things there. So I realized that I didn't want to be the one pushing for organic growth. I wanted my team to focus on that, and I wanted to switch to M&A, right? I think M&A was going to be the way I was going to get a higher growth rate. And so it was just all the pieces were there for me to understand is what I need. I just didn't know how to do it. Which is funny because I guess in hindsight, like, yes, I had gone through it with partners and stuff, but like what is the best way to go approach it? So
this puts you in an interesting position, right? So the company's at a current size, you have the team implementing leadership and administration systems. You're focusing on potentially inorganic growth. You've demonstrated through your career that you'll source information and leverage it and test it and experiment and take action, all centered around this catalyst for starting a business, which is potentially building something of value to sell it. Did you know the buyers in the legal marketing space, digital agency space at the time? Were you familiarizing yourself? How did you take those steps?
Yeah, it's interesting. In fact, so I think I knew the buyers, but I looked at them as competitors, right? Like probably the best, like there were buyers out there, right? There was some private equity coming in and saying, we want to pick up, and I had conversations with them, by the way. I've met them in person. I've met, so there were some players that I was talking to along the way, as far back as, right before COVID. So there were players there, but the ones that were what, you would call strategic buyers, which would be another business looking to grow its business by acquiring businesses, right? Not a private equity looking for just an investment. They were the big, and I think now, like once I learned that was a thing, in fact, the company that I ultimately sold to, I looked at as a big competitor, but I would say, after, one, I mean, like, look, we crossed paths in 2023. And I think one of the first things you challenged me on was, well, one, you said you wouldn't spend much more time talking to me unless I actually, took your course and knew what I was talking about. So that was helpful. So I will thank you for that. That was great. But no, when we met in person at one of your conferences, you kind of challenged me. It's like, hey, start talking to the buyers. Like, think with the end in mind, right? Like, like who are the buyers? And you mentioned one by name that ultimately became the buyer a year later, which is kind of funny. But the idea of starting to take more calls and reach out or look and like realize that, oh, the person who bought me, I realized had taken, like 100 million in private equity money or something crazy, just a couple years earlier. So they were primed to start growing. And if I wouldn't have figured that out, I probably wouldn't have spent much time talking to them.
Yeah, for sure. Well, let's before we talk about the transaction, which I want to spend some good time on. You were looking at consolidation in the legal marketing space. Run us through a little bit of the outreach and some of those initial conversations, because you got to LOI, you got pretty close on some things, and then something else shiny and financially lucrative pulled you away from closing deals. So what did the process look like? What are those early discussions with other agencies in the space that facilitate for you?
Yeah. That was great. I mean, we had our strategy map, and I got to be in the M&A seat. And so I got to spend all my time trying to figure this out, and I would say all my time, look, I'm still an agency owner. I was the sole owner. All my time meant like 40%, 30% some weeks, right? 20% other weeks. But, because you're still running the business. And if I could have had a full-time M&A person, I probably would have closed a bunch of those LOIs that I was having conversations with, right? So the LOI, so I was doing outreach organically, just doing cold outreach, LinkedIn outreach. I was reaching out to people I already knew, some network, hey, do you know somebody? Got connected through some people that way, and just started having conversations. First of all, I love talking to other business owners. I love just being able to share experiences anyways. That's why I'm in that entrepreneur organization. So getting on the phone and just having conversations was great, but having a process to start saying, okay, now the next step would be, I need to, give me all the deep information about your business that, you might find to think I'm a competitor. So that was an interesting skill to learn. It's back to sales a little bit. Excuse me.
And you are a competitor technically, right? When you're reaching out to other
100%.
legal marketing agencies,
Yeah,
you're reaching out to people who look like you.
and I was looking for legal marketing agencies specifically, as well as two different tangential services that I think we could have improved by just buying the knowledge. And that was around paid ads and social media. So those were the three things I had narrowed down to, those three things, and was doing outreach there, and did come down to an LOI with one potential seller, and that would have been a marketing agency that would add a lot of revenue. And I think because I knew the business, we knew where the economies of scale were and all that kind of stuff. Yeah. So like we were going through the process. We went through, we were in kind of early due diligence on some of those things.
And to share a little bit of the size, was it equal MRR to where you were at the time? Am I recalling that right?
Yeah, it was probably about 2/3 of MRR. They were a little heavy on the project, and so that would have been a goal, is to work more into MRR for them. I think that was probably also one of their goals as well.
Yeah. So you got to this point where you're making offers on other businesses. The team's running the show, but you also had a mindset shift that happened around the same time. The shift of the business of running and being an entrepreneur and it being an asset. Maybe explain that, because that ultimately led, I think, to why you said yes when the outreach came, or when you said yes to continuing the process.
Yeah, I think that's a huge point. Start that over. Yeah, I think that's a huge point, and I try to bring that up when I'm talking to other agency owners now that ask me, hey, tell me a little bit more about this. Everybody's like, you did the dream, you started it from scratch, and you took it from cradle to grave, you sold the company and all that stuff. So I think it was, while I always thought of selling the company as as the kind of exit, I always thought of it as that was the retirement final chapter exit, right? Like you take this one thing all the way to the end, and then you sell it, and then you walk off the sunset, and you're good for life. What I came to realize and have gotten much better at is the idea of thinking the business is just yet another one of the assets I have, right? So if I have invest in a stock portfolio, and that a bunch of the stocks suddenly go flat, they're not losing money, but they're not making much money. There's other places I could put my money, right, and have more growth. My business was kind of, without really kicking in the M&A, which was my focus, it was starting to get that comfortable with the lifestyle, but what is the value isn't really growing, right? The enterprise value. So I started looking at it as, well, how do I kick that into gear? How do I actually take this and get a return on the investment, which is right now my time, and at this point, 13 years of my time. and how do we kind of switch that to be the asset? I've also kind of likened it to, we all look at our houses as, you buy a house, it's like your starter house, and then you get into a little bit of equity, but you don't have any of that equity until you sell it, and then you get a bigger house, and then now the family comes along, you need a bigger house. And so when I sold GNGF, I didn't get to realize any of the enterprise value. I was just getting a little bit of lifestyle, and so that switch was very meaningful in starting to like look at spreadsheets of, well, how much am I making right now? Like, and when I say making, like, let's be honest, like, for agencies owners out there, it's one thing to say, here's my profit. What are you putting in your pocket? What are you putting in your pocket, plus retirement, plus some of the, what are all these little things? And what's the return on that? Like, what, how much, if somebody could give you 10 years of what you're putting in your pocket tomorrow, like that gives you now 10 years to go do something else with that money. And that's probably a better, I'm not going to tell people what it is. For me, like something like that was a better investment to take that kind of return. So that was the mindset, I think.
You're going from a paternal business owner, lifestyle business, to a performance business, looking at how this business is contributing to wealth creation, performing within a portfolio of investments. And then if it's not, what level of interventions required, get it there. And then is the alternative divesting it?
Yeah. And those terms are very investment minded type terms for the average agency owner, that whether they came from creative or accidental agency owner like me, the concept of divesting, or the term of divesting is really, it's you have one thing to divest, right? It's your agency that you built. A lot of people, like, that's their retirement fund. Like, I've talked to too many agency owners who really haven't put much into retirement. Like, their agent selling their agency was going to be the retirement play. And so it's very interesting.
So you get a cold email,
I did.
a competitor.
It was a cold email. I was sending cold emails out, and I got one of those.
You recognized it, right? When you're playing the game, it's easy to see other people playing the game. Give us the day. When did you get this cold email? Who sent it to you? And then take us down this process.
Yes, the timeline's going to sound a little crazy. So I got the first email in May of 24. I actually replied. I'm like, yeah, happy to jump on the phone, because I knew the person, and at this point, I also knew that they had gotten private equity money. They were they were searching. They had bought somebody else that wasn't in legal marketing. So I knew a little bit to be dangerous of, well, it's worth talking, because if anything else, I wanted to see how they were valuing things, to see if, like, hey, maybe I stumble on something that's too big for me, that would be good for them. Maybe they stumble on something that's too small, that could be good for me. So there also was a possible sharing of leads, right, in back of my mind. So I took the call. So we're talking that we had the call. It was a very interesting call, because they were strategic, and they were a little more, I would consider, like, software based, like, think of more of a SaaS model. Whereas, I was a traditional agency. They could value different than some of the other private equity I'd been talking to, right? So some of the other private equities, it was the standard, you're going to stick around for a little bit. It's a, multiple of profit or EBIT. And, like where we at, what's, those conversations, that same conversations I was having on the other side with people I was looking, right? This one was very different. The way they were approaching the market was much different. And so I said, that's a bigger number than I thought. My mistake is I might have said that out loud. But I know we scheduled another call. And so now we're we at the June. We had the call. He reiterated, I had sent some financials over, some more specific things he had asked for. He reiterated that, pretty much the same number. I mean, didn't trade much on anything. Said, yep, we're looking at this. You were, what the numbers you told me were pretty accurate. I mean, again, I think I had our act together, because I knew what a seller should have for a buyer, because I was looking for that same information. So I think that was a little benefit. So I had that, pack of information, sent it to him. We both had vacations somewhere in June and July, right? So we had a couple, it was like some emails back and forth, said, yep, still interested. And again, I'm still running the bit. I have an LOI. I'm still trying to work, right? So like I'm doing both sides, and still running the business as, again, we're trying to scale and grow. My team's doing some really incredible changes to some of the organic growth that they were working on. So there's still a lot going on in June and July. We reconnected and in July after the vacations and agreed. At this point, Peter, I think I had brought on you to help me out. So I'm like, hey, look, this looks kind of, I don't want to say too good to be true, but this is a really interesting way to value. You come in and help me out a little bit. So I did, bring you on into, so that some of the depths of some of this, but for the conversation here for everybody else, in 2 weeks in July, again, remember like most of half of June and half of July was gone on vacations for him and me and some other things. We got to LOI by the end of July, and he said his goal was to close by the end of August. So their goal was to close in 30 days from LOI to final agreement. When you talk to anybody else, they say, well, it's typically about 45 days if you're fast, typical 3 months, sometimes 6 months or so. So 30 days seemed crazy, but I said, I'm willing to go for 30 days. I mean, I like the number. I like where we're at. The LOI was, again, he didn't trade much on any of the conversations we had from the first phone call. So I really appreciated that. I think we had built a good rapport, good relationship. I do think, and I don't know, Peter, I'd be curious of your thoughts on this. Because I was being proactive in buying, I was a little more prepared to be proactive in selling. That makes sense.
100%. You knew the process, so you could predict the next step. You weren't the type of seller who didn't know what was coming and was waiting for the buyer to propose a question, explore an area of concern, or try to resolve a question. You came every single time probably like 2 or 3 steps ahead of where they were in the process, which from a buyer's perspective is extremely helpful. But I'll state this as an acknowledgement of your skill set. You not only ran the sell process, but there was no broker involved.
Right.
There's no one who sourced the buyer or someone sourced you. So it was direct outreach to you. And because you had already understood the M&A process, you said, I know what's next. Here's the information you're going to ask for. I want to overshare. And then you did some savvy tactics, one of my favorite ones, which was you led a lot of the agreements. You said, here's what we can do here. Here's the LOI, and here's the close date. Here's why I think we can accomplish this. Or even it's so much bravado in the process that we even said, here's the purchase agreement we would potentially propose as the way to move forward.
We propose a purchase agreement that was... it seemed bold, but and interesting enough, well received by the buyer as, look, we're a big company, really big law firms. For this type of transaction, they might be overkill. I would be happy to see what you guys would, and we're also sending them a document that we're willing to sign. So that moves a lot of conversations along. The other thing is that this was mostly done over Zoom, and there's something about, meeting somebody in person and going out to meet a meal and really kind of hashing out some of the nuances. And so I flew out to, the corporate offices and met them in person. We had built kind of like our own internal data room. Interesting enough, I did this because my team was overhauling a lot of the agency on the organic side growth, that I didn't really want to include anybody in this conversation because this would have been heavily distracting if it didn't go through.
100%.
So,
and with who you were selling to.
Correct. 100%. Like it was, some of them, like again, this is a competitor in the biggest degree at the time, right? It was like the big empire, right? If you think about it, right? So I'm talking to Darth Vader, and as far as they're concerned. So so it was on me, right? So fortunately I had an outsourced controller who really helped me between the two of us get the data room and everything. But when you start going through like every single contract and pulling all that together, when you have a salesperson and a director of operations that runs all of that process, you got to go in and say, okay, well, I know it's in Salesforce, but I'm, while the goal of 30 days was a really compressed timeline, I'm not saying that the time wasn't intense. There was a lot of all day Saturdays, nights. I'm still trying to help the team with all their, move things along with the organic side of the overhaul, but I'm doing this nights and weekends. So there was a lot of work, but yeah, no, we put together a lot of I'd say essentially it's like I project managed the whole thing. I was at every call, like, what's the next call? What are we doing? But if you really think about it, I mean, who has all the information in a deal? Like the seller has their information, and that's that's the information the buyer needs. And so I was putting together as much information as I could to show I have the assets that you're talking about wanting to buy. Here they are. Here's the contracts. Look, those provisions that you were worried about, I'm going to highlight them right now that, they're all assignable. We've already figured that out. Here's 3 contracts that we haven't figured out yet because they haven't, like highlighted everything. So he was able to put risk factors on stuff without even have to ask for the document.
Yeah. Night and day, a sophisticated seller with a sophisticated buyer can create a very productive deal process. I want to highlight 2 things you discussed because it's important to emphasize in our understanding of the value of the business. Private equity-backed strategic who's playing more of a SaaS play, so they can acquire clients and contracts, move on to a platform. It's very different than I'm going to buy your business, Mark, and everyone's going to now be an agency within our bigger agency.
Yeah, that's just going to run you a little bit better and have some economies of scale. We approach the market in a very different way, and our profit models are significant. When it's a heavy software-driven service, they just had significantly better profit models, and they knew what those were. And if they can keep X% of the agreements we had, and so I had a niche, like it was legal. It's all we, out of all the contracts, there was 1 contract that was not legal, and they were a bookkeeper to law firms, so it was close. So it was all legal. It was heavy MRR. So we had, by default, our initial contract for 12 months, and then they would roll to month, something I probably would have changed if knowing what I know now. And again, I think the other thing that the buyer liked was that I was at the point where I'm like, look, this is an asset. What are the things you need with it? I want to protect my team as much as I can from a soft landing, but I understand that, to maximize the value of this asset, not all the team's going to land with that company. And that conversation was had early on. I think because I was very open and honest about that, it allowed them not to have to worry about factoring some of that in, because if they're factoring in how much they have to pay some people that they don't really need, that's probably going to reduce the value of the deal to me.
Yeah, it's hard to get a deal where you maximize value, so price for the company, and maximize opportunity for the team. So it's very hard. And then you have cultural assessments that go into it. When it's a pure transaction, which is the economics around the revenue that we're buying and what we're going to do with it, there's a lot more that gets awarded to you. So without getting into the specifics, it is important to highlight that private equity-backed strategics do typically, to be competitive in the marketplace, provide more cash on close than great fit homes for your team. And that means there's going to be, yes, there's still a performance component. There's still, tying you to the success of the transition, but their incentives are built differently, and the way you can incentivize your team is built differently. And you traverse that extremely well.
Yeah, it's not to say that, I just threw the team under the bus. I mean, I worked with the buyer to create, because they needed the team for a certain amount of time. So we created incentive agreements. Hey, if you stick around for this time, there's some bonuses that come along. The people that were like sales is one. We're like, okay, we don't need sales on day 1 pretty much. So I gave some really nice bonuses there because, let's be honest, sales help get the revenue. So that was a big part. So I try my best to give like soft landings where people had months of income to go find something else and help find. I think between my network and other networks, like everybody ended up somewhere. So that's great. And some people did go to move with the buyer. I think 4 offers were given and 3 ended up working at the buyer.
We signed an LOI. You made this your second full-time job. Focused intensely. The buyer had said, we talked openly that this is a simple deal, very straightforward as a transaction, should only take 30 days. How? When did it close?
Yeah, so LOI was pretty much last day of July, and we closed the last day of August. So we did it in 30 days, and it was impressive. Now, look, you were helpful in the deal. I already had, some between my controller helping out a lot, and then having legal. Like we already had, because I was trying to buy, I already had a system of people and contacts and experts and all the people I needed to help with some of the structures. I didn't spend 3 weeks interviewing a lawyer, right? Or figuring out who knew what they were doing. That was very helpful in the process. And then, yeah, it was a lot of time. But yeah, 30 days, pretty. I mean, I tell people that, and everybody's mind is blown. But the buyer and I'll be honest, like, because you talked about, because I knew what a buyer wanted. We had a lot of stuff to the point where the person who ran the quality of earnings told my controller, this is the best set of books we've ever received from a seller. It's just having some of that preparation matters.
Having the preparation, and you didn't need to hire an investment banker to do your preparation. You ran your company that way.
Right.
And that's night and day. And then you also shock people. So the deal terms shock people. The time from LOI to close shocks people. And then your transition shocks people. So, Mark, how long did they require you stick around, man?
Yeah, this is one. So 6 months. 6 months with the terms were very favorable on the initial, like you mentioned, because of the type of deal. So there was a good transaction at the beginning where there is incentive payments, but like if I'm happy with the upfront and the incentives, that everybody says, assume you're not going to make the earnout. You hear that all the time. I know people make their earnouts, and I know some people make after, whatever, but like earnouts happen. But the fact that, it was only going to be in 6 months and I was pretty happy with the upfront was a very, very favorable for, the return on the asset for Mark Homer. So that was very good. But at the same time, it gave me a very window to start working with my team on. It's also only this many months for some of them. So what does that look like? So that was, 6 months. And I mean, we're coming, I don't know when this is going to be released, but like we're coming close to that. So I am almost, I'll be winding the formal company because it was an asset sale. So like, the LLC still exists under my name and all that kind of stuff. So it's just the assets that were sold. And we can get into some of the light structure if needed, but.
Yeah, it's helpful. Well, because one thing I want to know is it wasn't 6 months of employment. It wasn't 6 months of consultancy. That was the transition service agreement around the operation of GNGF as it transitions clients over and then winds down. How long was Mark Homer working for Scorpion?
0 days.
0 days.
0 days. Yeah. So the interesting thing is, again, going back to one. Let's see, I'm gonna a few items in. One, the fact that it was a strategic buyer that was buying for a different reason. They were buying the clients to get on their platform, which, by the way, I still believe. I mean, I didn't sell to a crap company. Like their platform's good. Like when I got to go out there and see it, and I'm like, man, I don't know how I would have competed against this in a couple of years, right? It's impressive. So, confident in that, and they had a good economics because of that. And then, the other item in there, oh man, I guess I want to take a little bit of credit, but like I put a lot of things in place where I wasn't needed, right? We put all these systems and processes and procedures where it was very clear about halfway through the due diligence that Mark Homer is not the person they need to make sure sticks around. It's his number two. What can we offer him to keep him around? Because that's every single client. I joke that I didn't know the name of all my clients by the time we got to that point, and he knew everybody's all the clients' kids' names, right? Like that was the difference between me and the director of operations, and they learned that. And so because we had put the systems and processes and like between 2x3x and EOS and stuff, like my team was the people that were needed. I wasn't needed. I wasn't selling. I wasn't servicing. Combined, with the fact that their model was MR, not, Mark's face of GNGF. Like they weren't buying the brand of GNGF.
Yep. Successful succession out of material areas of the business, sales being a very important one, but also going to a buyer where the selling future sales actually isn't required.
Was important, yeah.
What you're optimizing for is really important. There's a lot of people who are saying, well, here's the discount factors associated with businesses. Let me optimize and address those. Well, it depends who's buying it.
Yes. Yes, but I think we were, and I would probably change a couple things, and like we might cover some of those if you need to. But if I was to go back, right, I think you can still successfully solve for a bunch of them and be ready for the different types of buyers. You don't have to just lean one way or the other as an agency. I think I could have continued to focus on the profit and growing that and growing revenue and EBIT by acquisition and stuff for the traditional PE type buyer or just another agency who wants to, kind of gobble up and have another agency, right? Like that still could have been solved for. And that was all the things I was doing were good for that. But finding a way to, like, by the way, look, MRR is gold. Like that is in agency world. If you have contracts that say, I'm going to pay you this much every month for a certain amount of time, that's kind of like this like guaranteed amount of money that they know they're going to factor versus, here's money for this project. And in 4 or 5 months, we might sign up for that much money for another project. And yeah, you'd have a customer for 3, 4, or 5 years, but they sometimes just stop, taking it in-house, switch on their agency, but you have the MRR, it's much different. So I think I would have, our contracts went 1-year contracts, then month to month. I probably would have switched that to, 1-year contracts, then recurring at 3 or 6 intervals, just to have that much more. When I show I mean, think about it, like putting in a spreadsheet, how much is guaranteed revenue for the next amount of time? The more you can make that number higher, the better to this type of buyer. And these types of buyers are out there, man. It's just not the only one.
Yeah. Well, let's double tap on that. So the Mark that we have today, if we can drop him in, pick a year, what year are we dropping him? And then what's the checklist, maybe double, triple the value that you ultimately sold it for?
Yeah. So let's call it 20, like I buy my second business partner out. Let's drop in there. 2018, let's call it. I think I would tell myself, one, I would remind myself that every year we had a conversation about, should we get out of the legal niche and do other things? Should we like diversify? Is that dangerous? And every year that conversation came up in the strategy meeting, right? So I'd remind myself that it's good to be in a niche. In fact, there are people who are not just legal marketing, they are personal injury only, or estate planning only, or social media for estate planning. I mean, it's like there are niches within the niche, right? I remind myself that don't move out of that. I think I would earlier, I'd start working backwards. Like, who is the next level companies that could buy? Like, if I was to sell today, who would that be? If I was twice the size, who would that be? Just kind of working backwards a little bit. I never really put that effort in until maybe 2023 when we met. I mentioned the MRR, so I would probably do the, force, again, 12 months contracts I'm fine with, but extend the renewal periods. Definitely I'd lean into lead gen and growth outside of the way we were growing mostly through word of mouth and speaking. I would lean into lead gen for growth, just to kind of scale the organic. I would certainly have acquired earlier. That's probably the biggest one. Like if I would have talked to sellers and buyers much, much earlier, if I would have started that in 2019, man, it would have been a much better exit, like significantly. And I wouldn't have given in on profit. I think profit was something where it's like, depending on the year, it's like you always make an excuse. Well, I'm investing in the company. So that was sales and marketing. But you really look back and go, did I get a return on that? Like, was it worth the invested profit? So I think I would have created a minimum of profit, which we did, once we got to 21, 22, we put like a minimum stake in the ground. So, we can't go below this. And so I would have done that earlier on as well. I think there's probably some other things, but those are some big ones.
Anything individually that you feel like, do you feel different? Because exiting a business is a club, acquiring companies is a club. There's this threshold of achievement that's bestowed upon those who take on big moves in what we deem complexity in business, but also it's personal and professional growth. Like, you've changed too. How did that feel?
No, I mean, it feels, again, like when you tell people and they're like, man, like that's like the dream, right? You, again, cradle to grave, like you started something and then you sold it. That doesn't happen often. So like that feels great. The other thing is, man, I've always, again, I've talked about, always putting myself around other entrepreneurs and giving as much experience share as I get. So being able to, I'm constantly in agency networks and stuff and be able to kind of like share now. I mean, I have a whole bunch more stuff to share, not just on, hey, I did this thing and it worked for my team for this or that, or we grew a little bit of this, but it's like, oh, because I put that in place 3 or 4 years ago, that led to this lever being better down the road for a sale. So now I had this like interesting knowledge where, I can kind of come in and chat with people about the right levers to lean in on, because again, there's tons of methodologies out there and business methodologies, but there are some of those methodologies miss some of the levers that you need as an agency owner, specifically in service type businesses, to set yourself up for, I think, a better exit, and slowly helping people with their mindset shift as well. And the other thing that, now that I've gone through this, one of my goals is, how do I go take all this knowledge and say, because look, I had the knowledge in 22, 23. I was gaining a lot. Here's how to go about doing this. I still didn't have all the time. I wanted to go. I mean, we talked about this. I was hungry to acquire. I even had a pool of money to use to acquire, right? And I just didn't have time to, when the agency still doing all the things it needs to do, pulling me in different things. I didn't have the integrator in place. I had a good number two, but I didn't have like a replacement of me. And so if you can come in and like be that replacement for somebody and help them scale, man, that could be a lot of fun.
Yeah, because M&A is seductive and it's fun for the right type of person. And you had fun doing it, and it helps that you're good at it. So this is a good way of saying, well, what's next for you then, Mark? Now that you sold GNGF, what's the new venture? What are the new opportunities you're excited about?
So interesting. For the first time in a long, long time, I have a bunch of capital. I have a bunch of money in a bank account from the sale, and I have a lot of time. I can't think the last time in my journey as an entrepreneur where I've had both money and time at the same time. Like that just doesn't happen often. So my goal with having that, money and time at the same time, is how do I take it and leverage it to grow, right? How do I grow that? Like, again, thinking like an asset, how do I take this? So I'm looking and going, there are these scales of how you sell a company, to different levels, right? Like we talked about, there's strategic buyers, there's private equity buyers. They have buyers, then there's like the big old WPPs as well as, some other larger aggregators. And so there's different levels, but there's this micro level. It's either figure it out and sell on your own, figure it out and go acquire on your own, or like get a broker or what, you have like, mixed things there. So my thought is, building essentially like a holding company where I can invest both capital and time into some other agencies to help them scale and hit that next level of buyer, and give them some of the time by being able to do some of the work on the M&A side while they work on it. That's I haven't fully fleshed it out. I'm having some interesting conversations with people where it seems to be of interest, but that's where I think it could be a lot of fun, because it's like a win-win, right? It's like I get to go do something that's very interesting and a lot of fun in a world of running agency services, digital agencies that I know very, very well. I can look at somebody's P&L and tell you probably how their business is doing, and give a little coaching along the way of kind of like systems and process stuff, but not do that. Like I don't want to be the operator anymore, and then use my time to go find these agencies to buy and acquire and scale somebody through M&A. That's kind of the goal.
Yeah, and you're able to do that because you don't have the restrictions in your transaction. Like a lot of people who ultimately sell their service business is tied to some 3-5 year restrictive period where they can't compete or they can't use the blood, sweat, and years they had in their career in a similar way. And you really isolated that to only legal. And that was another really important bit that's opened up this whole world of investment, but also partnership that you get to have with an industry you have over a decade of experience in.
Yeah, that was one of the biggest non-negotiables we discussed, and like they give on some other things because of that one. But it was getting it carved out where it's digital legal marketing is the only non-compete I have for years. And so I can't go help another legal marketing agency acquire a legal marketing agency. I can't kind of be in that business. But there's a lot of other agencies out there that are very interesting. Like I said, before this, I was in an experiential agency, right? I mean, like I've done other agency work.
I want to close out with what are you most proud of? And I don't want to give it any color or context. So where you're at today, it's the beginning of the new year, 2025, looking back, what are you most proud of in your journey?
I think I'm most proud of kind of taking something cradle to grave and actually having this experience and being on the other side, having, I would say, like majority of my team that I had, they'll chat, text, happy, like thankful. So, like I think people get worried at some of that. So I'm very proud that I've had the relationships, the ability to grow with the team and around me to kind of like, one, personally have a great game, but also, man, the experience is what was amazing. I mean, in hindsight, I now realize that it's not a lot of people that get to do this. And so I'm kind of proud that I did.
If an agency owner is listening to this and goes, "Ooh, Mark, you're investing in agencies or you're partnering with agencies to help them scale and grow," how do they reach out to you?
Oh, good. Yeah. So LinkedIn is great, by the way. I'm on LinkedIn, and so you can find me there, Mark Homer. I have Grandin Holdings is the holding company. So by the time this podcast is live, I'm sure the schedule button and all the good things that need to happen when you don't have your whole team to build stuff for you anymore will be done. So grandholdings.com. I'm sure you can throw in show notes or something.
Indeed. Mark, not only have you done something from cradle to grave, you're also helping others do the same. And it's extremely noble, it has significant impact, and it also is a good use of your time since you got so much of it now. And so was this podcast. So Mark, thank you. Really appreciate you coming on and sharing it with our audience, and good luck on the first of many new investments and acquisitions.
Thank you. Thanks for having me.
Thanks to Mark for joining us on today's episode, and thank you for listening to Agency Acquisitions and Exits. You can find us on Spotify and YouTube. Give us a follow. We post stories from industry experts and entrepreneurs about how they exited or acquired other businesses. If you or someone you know should be on the show to talk about their agency M&A story, send us a comment, send us an email. We'd love to talk to you. As always, thank you for listening. We appreciate you. Stay safe.